We're at a pivotal moment where nation states like Luxembourg are making moves into Bitcoin, Treasury companies face fresh valuation challenges, and the macroeconomic debasement trade narrative is driving a new wave of institutional interest. Richard Byworth is a managing partner at the $2 billion alternative investment firm Syz Capital, and he brings over 25 years of investment experience and a front row seat to these shifts. In this episode, Richard reveals what institutional investors are seeing beneath the surface and why this moment in time could be the most pivotal for Bitcoin yet. All right, let's dive in. All right, Richard Byworth, welcome back to Bitcoin for Millennials.
Thanks, Bram. It's great to be here again.
Yeah, I'm super happy you're back. This is probably part 4, and also this is episode 200. And I'm super happy that I've been able to connect with so many people on this journey just by doing this. And you are one of them, so I'm very grateful and happy for our friendship and happy that you're here.
Bram, I feel absolutely honored to be your 200th episode. And as I said to you the very first time we met, I think the work you're doing is really essential for your generation. So congratulations on just a fantastic job, and you're getting clearly all the recognition that you deserve. So well done.
Thank you. Yeah, I'm just trying to do my part, but I'm happy to see it's going well. So let's just dive straight into it. I mean, we recently hit an all-time high of 126,000 and some change. And while institutions are accumulating at unprecedented levels, I saw even a number that said like 3,200 Bitcoin daily with only like 450 mined. There's a lot happening, but retail adoption seems kind of slow. I think many early adopters appear somewhat, for lack of a better word, bored. Yeah. So from your perspective, what are institutions seeing that retail might be missing?
Well, I think your average institutional investor is at least hearing about Bitcoin all the time now, and it is part of the discourse. We've seen Fidelity, BlackRock put this in as sort of part of their weighted portfolio allocation, anywhere from 1% to 3%. I think a really big sort of milestone was the Sovereign Wealth Fund of Luxembourg being the first sovereign wealth fund in Europe to add Bitcoin to its balance sheet in the form of a 1% allocation. So, when you're seeing all of these things move along, and as you know, I help with advisory work for Jan 3, and we talk to a lot of nation states, and just seeing the absolute adoption there, and particularly with one conversation I'm involved with in Central Asia. I mean, this is the accumulation of Bitcoin is a very strategic part of their sovereign wealth strategy now. And we're just seeing this more and more. I mean, Middle East, you've seen Saudis, Dubai and Mubadala, and Abu Dhabi as well start to point in this direction. So I think it's interesting that the sovereign wealth funds are understanding Bitcoin. The central banks obviously are understanding Bitcoin and putting out a very negative message around Bitcoin, because it's obviously a threat to what they're able to continue to do. If everybody starts buying Bitcoin and selling euros, then it makes it a lot harder to print the money and not have complete debasement and failure of the currency overnight. So I think more and more people are understanding the extent of the debasement trade in the institutional world. Gold and Bitcoin are seeing new all-time highs. Bitcoin obviously has underperformed gold this year so far, but as you asked me the question about that earlier today, and I said it's very simple. Central banks are not buying Bitcoin; they're buying gold, and they're going to be the biggest buyers. And so obviously we've seen China, particularly in Japan, stop buying treasuries, and China particularly buying gold aggressively. So I don't think that's a trend that's about to change. The debasement trade is here and real. Institutions do understand this more than retail do, unfortunately, and I think it's a big part of the work that you do a big part of the work I do is to try and help people understand what is happening to their money and why everything's getting more expensive. And so this is a little bit why retail are getting left behind. I think too often people look at Bitcoin just as a trade. And to your point, like, I'm getting bored of it. It's not doing anything. I would have expected it to do more. And there's that famous meme of the guy, poking Bitcoin with the stick and say, "Come on, do something," and then getting his eye poked out by this massive green candle. And that's just the way Bitcoin behaves. It's kind of like when everybody's just lost interest, that's when it starts acting.
Yeah, it's funny. I talked to American Hodl, and he said he saw an inverse version of that meme where the Bitcoin was poking the person, like, do something, right? There's something like action bias, or I don't know if that is the right term, but it's like, yeah, like doing nothing, just sitting on your conviction, just hodling. It's just very hard, right? And I do think also when we talk about retail, I mean, there's a part of retail that is just total oblivious to the fiat money problem, right? But there's also this part of retail that is already into Bitcoin, maybe on Bitcoin X, Bitcoin Twitter, already thinking about the next thing. Like, they're totally seeing where this should be going, but the rest of the world is super, super slow, right? And so that kind of puts them in a place where they're like, yeah, okay, but why isn't everything moving as I'm expecting to be, or how everyone in this, I'd say very tiny bubble is talking about where we should go, and that kind of gives them a new sort of uncertainty about whether they're right or not. And that I would say makes them distracted with, all this other stuff, while I think the main challenge is probably just holding, right? Like that is basically what you need to do.
Yeah, I think that's the luxury that many Bitcoiners find themselves in is having done the work and having that level of conviction that they can just go on with their daily life and know they've got Bitcoin and not have to think about anything. Whereas your average retail trader is busy trying to outperform the S&P or, day trade to, find the next meme stock or whatever it might be. But Bitcoiners are fairly comfortable and happy sitting on their Bitcoin and just waiting, as you said.
Yeah.
I think you said something at the beginning about early adopters getting bored and selling. I don't think that's what's happening. I think...
well, not necessarily selling, but like kind of like losing conviction or thinking like it's all going too slow. You know what I mean? Like trying to find new, I don't know, problems to fix, to discuss, whatever. That's what I mean.
Well, I figured that you were talking about, whales selling their Bitcoin, which has obviously provided a lot of the supply into 2025. A large amount of it has been through whales selling. I think that's just a natural course of business when Bitcoin makes new all-time highs. If you've been sitting on it and you've been waiting to buy a house or a car or whatever it is as a Bitcoin whale, then maybe you start to take a few profits. And, for much larger holders, that might be buying an island or buying a super yacht or something like that. I don't know what they tend to do with it. But obviously, I think that a lot of the early Bitcoiners have been waiting for this level of liquidity to come into the market. And so that's what's allowed them to start to take profits, but also thinking, we're getting to the end of this fourth quarter or we're getting through the fourth quarter. And normally that's when you see the high in the 4-year cycle. And so I think we're likely to see ongoing whale selling into this quarter, because if we don't start pushing higher, then maybe we start pushing lower sooner.
Bitcoin custody is evolving, and OnRamp is leading this change with multi-institution custody, eliminating single points of failure. Instead of relying on one institution, OnRamp secures your Bitcoin in a cold storage multi-sig vault backed by 3 independent custodians, where no single party can move your funds alone, providing an unprecedented level of security. Your assets are protected by a 100 million Lloyd's of London insurance policy, with all transactions fully auditable on-chain and only executed at your direction. This means complete transparency and control over your assets at all times. Beyond custody, OnRamp provides comprehensive Bitcoin services that include trading, lending, inheritance planning, and IRAs. You can view them as your private Bitcoin banking partner tailored to your wealth preservation goals. Whether you're new to Bitcoin or an experienced holder, OnRamp's approach helps you secure your generational wealth with unmatched security and peace of mind. You can sign up at onrampbitcoin.com and use code BRAM, that's BRAM, to receive $150 in Bitcoin after your first deposit. If you first want to learn more, you can also book a free consultation via their website to speak with one of their Bitcoin custody experts. Tell them you came through me, and they'll take extra good care of you. My American friends, I've got something for you. If you're into Bitcoin, you want to grow your stack in any way possible. What if you could do it effortlessly just by spending your fiat? The Gemini Bitcoin credit card is designed to help you do just that by giving you instant Bitcoin rewards on every purchase. Just use it like any other credit card and earn back up to 4% on transportation, 3% on dining, 2% on groceries, and 1% on everything else. There are no annual fees for this card and no exchange fees to receive your Bitcoin rewards. Sign up to get your limited edition Bitcoin Orange credit card and earn a $200 Bitcoin bonus when you spend $3,000 in the first 90 days. You can find more information and terms in the description below or go to gemini.com/Bram to sign up today and start stacking effortlessly. That's gemini.com/Bram. This is the 200th episode of Bitcoin for Millennials. I want to thank everyone who's been coming along on this journey, listening, following, sharing everything that we've been talking about with regard to Bitcoin. I'm super appreciative of your support and I want to give something back to you. I'm going to give away 2 awesome Bitcoin products. The first is the BitX Gamma, which is an open source Bitcoin home miner, in this case assembled by powermining.io. And the second one is a Blockstream Jade Plus, which is a premium Bitcoin-only hardware wallet. To get a chance to win these products, please share your favorite moment or episode of any of the 200 Bitcoin for Millennials episodes on your preferred social, so either X or Nostr or even YouTube, Instagram, wherever you think you could reach the most people. And then send the proof to me on X. I'm at BRAMK, BramK, or send it to me via email, bram@bitcoinformillennials.com. And in the next 2-3 weeks, I will pick 2 random winners and announce them on my X, and then of course also notify them personally. Again, thank you so much for your support. I hope you keep sticking around. I'm going to stick around. This is just the beginning. Now let's go back to the conversation with Richard Byworth. So on that kind of like Luxembourg moment that we saw recently, as you said, it became the first Eurozone nation to allocate 1% of their sovereign wealth fund in Bitcoin ETFs, right? I think I'm not sure what 1% actually represents in terms of euro amount, but yeah, how significant do you think this milestone is? And maybe even more important, like what does this signal about the future of nation state adoption?
Yeah, I think it was quite significant because, you know, Luxembourg is obviously a European country that is sort of in focus, and it's sort of a wealth haven within Europe. I think other nations have discussed it and sort of been shut down by the likes of Christine Lagarde. I think, was it Poland or Hungary about 6 months ago? We're talking about putting it on the balance sheet and they kind of got shut down a little bit. But the Sovereign Wealth Fund is something that's obviously a little bit harder for them to control. And so, I think it's a very positive step. I unfortunately don't hold much hope that the UK will make a move like this. I'd always said that I think Switzerland will be the first national bank to put it on their balance sheet, which obviously they still could be in terms of national banks, since Swiss National Bank has a large holding in MicroStrategy and a couple of the miners already. So, you know, I think you might be aware that there's a petition for a vote to make Bitcoin part of the sort of preservation of substance behind the Swiss franc along with gold. So to change 3 words of the Constitution to say "and in Bitcoin" from invest in gold. So I think that's rather key. And maybe, the Swiss National Bank look at what happened in Luxembourg and say, okay, we won't necessarily be the first to do this, because the Swiss National Bank does sort of double as the sovereign wealth fund, given the way they behave. So yeah, I think Switzerland could be next. Mm-hmm. And they've, being a neutral country, they're always trying to please everybody. So they've been a little bit cautious to act first, but maybe now they can.
And so the other topic that you mentioned, debasement trade, right? It's a new term that's I think was coined by JP Morgan, but obviously it isn't really new, as this is basically the entire underlying thesis of why we are into Bitcoin, right? And I think that is the thing that people have been talking about for years, right? So Bitcoin's macro narrative is protection against inflation and currency debasement. Now this is being called the debasement trade. Obviously, we know this. Well, perhaps it is a trade, but it is the last trade, right? Like you trade into Bitcoin and then you don't go back. So yeah, this kind of like new narrative, or let's say a debasement trade is more like a mainstream financial narrative that's kind of starting. How important do you think that is? That it's actually being talked about like that now, and that also Bitcoin and gold are basically being put into the same bucket?
Well, as you rightly point out, we as Bitcoiners have sort of been talking about this for many years, and I think the fact that it's now becoming an accepted truth within the Wall Street community means that it's only going to get more of a focus, i.e. Bitcoin, and its adoption within the institutional community. I think hopefully that permeates a little bit more to your average man on the street, because I sadly think that your average man in the street is the one that is going to lose the most if they don't understand the debasement trade. And so, obviously, again, that's the work you do in this podcast and the work, we all do as sort of Bitcoiners, trying to be out there helping people understand. But I think it's only positive that people, more and more people understand it. But I feel, there is growing likelihood that Trump and the US team are going to be pushing harder and harder on weaker dollar and lower rates.
Yeah, so with everything happening, and also what I mentioned before, right? Like there's only 450 Bitcoin produced daily. The institutions are accumulating over 3,000 daily. So despite this seemingly supply crunch, we would expect stronger price action, I would say, or at least that's kind of like the discussion I see. But yet we're kind of seeing this price weakness, right? We went to 126, then we went back down with an inverse God candle, or like a double inverse God candle, right? And also with the Bitcoin Treasuries, there's this MNAV compression, right? How do you explain or think through this apparent disconnect, right? Like, so on one side, all this stuff is happening, and on the other side, we don't really see it reflected in the Bitcoin price, but also these Bitcoin Treasury company valuations.
We can maybe address the Bitcoin Treasury sentiment separately, but just to talk about Bitcoin, obviously, the event that happened just prior to the weekend was Trump and the tariffs and this whale on Hyperliquid doing a very huge trade just before the announcement. Whether that guy was inside or not, I mean, I think the fact that China had announced their rare earths policy on Thursday was definitely going to get a response from Trump. And if you were a logical thinking person, you would think, well, if he hasn't announced it by the close of play on Friday, there's a very good chance he does at the weekend. So you could put a short on. And I could see that being a sort of a logical way of thinking with the information that was out there. So a lot of people trying to imply that this is some insider in the Trump admin. I mean, the timing is a bit weird. It was literally the final trade was put on minutes
well informed
before. But I would say there is some level of argument to say that it was a logical trade to do after the S&P had closed, because you knew that the liquidity will only get worse over the weekend. And Trump is likely to say something over the weekend, given what China had done Thursday. So I'm always one for a good conspiracy theory, but in that particular case, I think there's a way to look at it in both directions. Certainly with seeing what M2 is doing, you've seen a complete decoupling from the normal link to M2 and the price of Bitcoin over the last few months. So I definitely do think that we are due to some sort of impulse higher. But sentiment is everything, and that's probably segues nicely into the Bitcoin Treasuries. MNAV is two things. It's an indication of sentiment for the sector, but it's also a reward to the best accretion strategies within the space. And so we always talk about who's leading from the front there, and I think of the four big names that I always reference, just because, and people say, oh, why don't you talk about Smarter Web? And I'm like, well, Smarter Web, obviously they have the UK, they have a big pension pool in the UK, but away from that, they're going to have competition for that. And I think there's nothing particularly differentiated about the strategy. But when I look at MicroStrategy, of course, what they're doing, they're just leading from the front in terms of tapping all the different capital pools. They're now talking about tapping different global capital pools in different currencies. And then Metaplanet, obviously with the derivatization of their process, I think, is obviously very strong. I speak to Simon about it on my podcast and sort of explore a lot of his strategy. And then H100 with the way that they capital raise is very unique, actually. And then Capital B with their financial innovation. So I always like to talk about those four specifically, because I think they sort of differentiate themselves from the pack. When you look at those four, I mean, I think Metaplanet crossed below 1 times MNAV today, which, I never really thought I would see happen. I think we will see some level of response from the company if that gets too distressed, because Simon is a financial guy. He understands that if he sells Bitcoin to buy back his stock, he's actually accreting more Bitcoin per share at a sub 1 MNAV for his shareholders. So that will quickly change that dynamic. Slightly different to the approach from Capital B. I think it's important to note that a lot of people say, oh, well, Saylor says you should never sell your Bitcoin. But actually at the New York Unconference, he actually made the point that in an extreme case, if he was struggling to pay the coupon on his preferreds, he'd sell some Bitcoin. So I think that helps the sort of religious mindset mob of you never sell your Bitcoin get closer to the reality of what we're dealing with here in the financial markets. I mean, short sellers are ruthless. They're absolutely ruthless. And if they think you're not going to defend a discount to 1 times MNAV, they'll just hammer you to the floor. And then you will be a distressed company, and then you will be forced to sell your Bitcoin. So I think, well, I mean, you won't if you haven't got any debt, but a few people do these days have a bit of debt. So that's what the shorts are pressing on. So I would just, just talk about the sentiment and the shift. Obviously, I think last time you and I were talking, Metaplanet was an 8 times MNAV, and that was only a few months back. And now we're talking about 1 times MNAV. So that is sort of pendulum shifting between hyper optimistic to hyper bearish. And, I saw that one of your questions that came in on the post you said, how do you feel about some of the people that were saying you should be buying this at 3 and 5 times MNAV, now capitulating and selling at 1 times MNAV? Mm-hmm. And I would say that's just normal. Like, this is what happens in psychology of markets. People capitulate at the bottom. I'm not saying this is the bottom. I do trust Simon to do the right thing and protect that MNAV because he understands it, I'm pretty sure. But I think you're pretty flawed now in terms of your risk. So, do I believe that Metaplanet can accrete more Bitcoin per share over time in the future, and therefore this is an optimized ETF at this price? Yes, 100%.
Yeah.
So yeah, that's sort of how I feel about things here. I put out a post about a month ago, maybe 2 weeks ago. Time flies. Talking about how I am actually actively selling ETFs to buy Metaplanet at this point, because for me it's almost like this pre-embedded option of, do I trust Simon and Dylan to be able to accrete more Bitcoin per share and therefore optimize over an ETF that is charging me fees every year? So I'm losing Bitcoin per share in an ETF structure. And if I'm buying them both at implicitly the same price, then yes, that looks like a good trade to me.
I have some other questions about this, but I'm thinking about this discourse about Bitcoin Treasury companies, right? Like I am not really an investor or more of a risk taker, right? Like my majority is just stuck in Bitcoin and not doing anything. But I think it was a podcast with Matt Cole from Strive, who just talked about the concept of Bitcoin Treasury companies being, okay, if you agree with the underlying thesis that, basically is what Saylor is saying, right? Okay, Bitcoin is going to be, I think it's $21 million dollars in 2042 or something like that. If you agree, Bitcoin is the most important, new, most scarce, hardest asset, blah, 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 all these things in the world, then you need to acquire Bitcoin. Like, there is value in that. Okay, so if you start a Bitcoin treasury company, your goal is to accumulate as much of this new thing as possible in the most optimized way possible, right? Mm-hmm. And when I listened to him, I was like, yeah, that is just very logical, and I understand that some people start companies like this and then try to do that because I agree with the underlying thesis, right? But I think the discourse in general is then kind of about something that you also touched upon, right? Like people saying like, oh, at 3x MNAV it's undervalued, or even at 5 or even at 6, whatever. Like there's just all this different conversation around it, right? But there's a mismatch, or let's call it a tension, with just the general market and also these short traders that you say, that you mentioned. Like, many people don't even understand the Bitcoin thesis. So how can you even understand the Bitcoin treasury company thesis? So I think that is just an interesting thing that is happening, because the people that understand Bitcoin and are kind of wary about Bitcoin treasury companies, as am I. I only think actually the companies that have Bitcoin Maxis at the helm will do great, right? But they then start questioning the whole strategy or just the concept of Bitcoin treasury companies, because the market that also doesn't understand Bitcoin doesn't understand the Bitcoin treasury companies. Does that make sense, right? Like, it's kind of like this weird reasoning where people then become doubtful of these companies and then doubtful of Bitcoin. So yeah, I just wonder how you look at that, because like one other question from X, right, said, could the next bear market be triggered by Bitcoin treasury companies trading below MNAV being forced to sell? That's something you just touched upon, right? But
no, I think they will be acquired, right? So imagine MicroStrategy, who can issue shares at a premium to their NAV, and looking at, I don't know, let's say XYZ company, that's trading at a 0.8 times MNAV, they can just do a straight share swap as probably the best credit in the space, and not the that credit is relevant, but just purely from the fact that they're always going to have demand for their equity, that they can go out and just start acquiring using their share capital. And even if they throw the rest of the company away, whatever the operational business is, and just buy that Bitcoin at a discounted NAV, they're buying 20% discounted Bitcoin. So yes, very happy for them to do that.
Which is an optimized way of acquiring Bitcoin.
Yeah. So I think the idea that a bear market is going to cause a complete blowout and washout of these companies, I think it will just add opportunities to the stronger players to acquire them. So I think that will just be a very nice thing for MicroStrategy and even Metaplanet shareholders at some point in the future.
If you want to self-custody your Bitcoin stack, I recommend the Blockstream Jade Plus. I've been using this premium Bitcoin-only hardware wallet for a few months now, and I love its design and ease of use. What makes it stand out is its open source hardware and software, and Blockstream's unique genuine check, which makes sure that your device is authentic. No backdoors or compromises. You can connect with the Jade Plus however you want. Bluetooth, USB-C, or you can go fully air-gapped with its built-in camera for cable-free QR transactions. The metal case feels solid and the color screen is easy to read. And it connects with your favorite Bitcoin apps like Blockstream Green, Sparrow, and Electrum. Get your Jade Plus today at store.blockstream.com and use code BRAM to get 10% of your entire order. Let's talk about something a lot of people don't think about before it's too late. Where are you storing your Bitcoin seed words? Are they truly secure? I found my solution with StampSeed. They now offer both 12 and 24 word titanium plates, so whether you're securing a hardware wallet or a multi-sig setup, they got you covered. Your seed phrase gets permanently stamped into pure titanium that withstands fire, survives water, and lasts for generations. Unlike shallow etching methods, StampSeed's patented tools help you to deeply stamp every letter for permanent readability, protecting your financial legacy. Their new kit includes test pieces for practice and is compatible with both the 12 and the 24 word plates. Paper seed phrases are a disaster waiting to happen. Secure your Bitcoin with StampSeed for decades to come. Go to stampseed.com and use code BRAM, that's BRAM, for 15% of your order. So maybe to conclude this part, this MNAV compression, isn't this just the market is the market is the market, basically, right? It is just a certain interpretation or understanding of Bitcoin, whether you understand it or not, and therefore a certain interpretation or understanding of Bitcoin treasury companies, and that is basically what is happening in this time.
Yeah, I didn't answer your question about the understanding Bitcoin and then the niche of the niche. Because you and I have always sort of tried to estimate how many people really understand Bitcoin. And the more I've thought about this question, the more my number goes lower, even myself included. I mean, like I definitely don't understand every aspect of Bitcoin, and trying to choose a side in this op return debate has been very confusing at times. And I think, not that I want to open that whole can of worms, but as a non-technical person, really trying to understand all the facts around that has been difficult. I know that you've fallen towards the decision of going with knots.
I go back and forth. I would say I'm in the middle.
Okay. Yeah. I think I've just opted to run version 29 of Core, and that's it. But I think that if you go to the point of saying how many people actually understand Bitcoin and therefore have ultimate confidence in buying a 1 times MNAV Bitcoin treasury company, but also have to understand why they potentially should do that, you need to understand the different aspects of financial engineering. And if you go to your average banker and start trying to explain what a Bitcoin treasury company is doing, like the minute you start saying, oh, it's very heavy in dilution and that's accretive to shareholders, you'll see the whole gears breaking in the back of their mind as they're sort of their programming around dilution sort of is not calculating correctly. Like this whole model not only is sort of confusing for Bitcoiners, but it's also confusing for traditional finance. Like there are aspects of this that they're struggling with. you're seeing obviously some institutional investors like Capital that are really putting some money to work in the space, but actually it's not a huge amount. So I think, and that's the other thing, that's how sentiment has been able to shift so fast, is because it's not been adopted so much by the institutions, the Bitcoin Treasury play, but it has been very much a retail play, and retail pushed sentiment and MNAVs to very extended valuations.
Metaplanet kind of benefits from Japan's, low rates and regulatory environment, and obviously also, the problem that Japan is in. I recently had an episode with Peruvian Bull, who's like deep into that too. So when you think about Bitcoin Treasury companies, how important is this kind of like jurisdictional arbitrage that Metaplanet has, and is that what gives them this opportunity?
Yeah, I think there was definitely, that is sort of what helped their early success. I think there's a few competitors now in Japan, which is somewhat diluting their advantage in that, as you say, that tax optimized situation, but also the low rate environment has been sort of, as I say, diluted by other players coming in. I do think that some sort of national strategic advantage is imperative, and that's actually a good reason to pay attention to Smarter Web, is because the UK has this, even though the UK regulator has turned around and said you can now buy ETNs in crypto in your account, a lot of these providers are saying no, you can't. Like, we haven't proved the thesis yet. Hargreaves Lansdown have publicly said we're gonna, keep reviewing this situation, even though the regulators now unlock things. So what does that mean? That means, if you want exposure to Bitcoin, you really only have one option, and that's to buy a Bitcoin Treasury company. And, obviously Smarter Web is probably the most well-known in the UK. And that is a £1.25 trillion self-directed pension pool. Now, obviously, not all that money is going to come into Bitcoin Treasury or Bitcoin, but it's a fairly decent capital pool of people that certainly, many of them are paying attention to Bitcoin. And so I do think that's one of the unique advantages of the UK market. And so I think that definitely needs to be paid attention to.
Yeah. All right. Let's talk a bit about macro. I think there are some Fed rate cuts on the horizon, or at least I think if we look at the prediction markets, there's a big possibility. How do you see that not only evolving, right, but then also Bitcoin's role within this broader macroeconomic landscape when the Fed will eventually kind of be forced to start lowering rates and starting to do a little less stealth QE and a bit more overt stimulation. What is your take on that?
Well, look, Trump is a president that sort of aligns his popularity with the success of the stock market. And as my friend Jeff Booth always says, the natural state of the free market is deflationary, right? And, we are getting to a point with AI and all the various other factors combined with that, like robotics, where we are going to see very strong deflation. And, a deflationary environment combined with a very big debt burden is very dangerous, as Japan has suffered for 30 years and will attest. I think it's really, really important to know that Trump sitting in that seat is going to be putting a lot of pressure on the Fed to cut. And obviously he's changing members of the Fed in his sort of focus on getting the outcomes that he wants. But yeah, as I said before, I think there's no question Trump's agenda is going to be to take interest rates lower and the dollar lower. So to decrease the debt burden, but also, play the tariff game to try to be bringing revenues in while not burdening, in his view, the average US taxpayer more. So that's kind of the overall picture that I see. I think liquidity all across the world is continuing. I think M2 is at all-time highs, and that's going to continue. So yeah, I think gold and Bitcoin higher.
It's interesting that the thesis doesn't really change, right? It's more the feelings of people at a certain moment in time where they're kind of like doubting, at least that's my point of view, like the speed at which other people are adopting it or companies are adopting it, or, you know, and that is kind of what I see is that people seem to be forgetting that, yeah, like Lynn Alden says, nothing stops this train. So sometimes it goes a bit faster, then it goes a bit slower, but eventually, yeah, I haven't really seen any logical reasoning that goes against the mathematical assurance of, you know, fiat money debasement. So maybe that's just something that that people are missing. That kind of like patience to,
I think
wait it out.
I always like to use Warren Buffett to talk about Bitcoin, because there's certain aspects of Bitcoin that he's understood very, very well. Like, he has this quote, like, the stock market is a place where the patient are rewarded by the actions of the impatient, or something to that effect. I think this is very true of Bitcoin. Like, if you're impatient, you're expecting a big move tomorrow, and you buy it for a 1 week trade or a 2-day trade, you're more than likely to be disappointed. But if you're saying, I'm putting money away for 4 years, then we're fairly certain that you're going to be making money on the other end in fiat terms. And, you know, if you can lock money away for 4 or 5 years, then Bitcoin will reward you.
We've often talked about the asymmetric opportunity of Bitcoin, or also the contrarian opportunity of Bitcoin. And we also just talked about, you know, many people don't see it or are impatient, or people think or worry that they've missed the boat. The number you mentioned about how many people understand Bitcoin, I think you were at like 10K or something in the world, right? So very, very low. How can we help people understand where we are in terms of Bitcoin's adoption today? The fact that it is so early, the fact that it is such an asymmetric opportunity, that you have definitely not missed the boat, although, you know, 100,000 something number, you know, might give you some unit bias in thinking that that is the case. Like, how do you talk through that? Also, you know, you talk to many different people with obviously your work. So yeah, how do you address that?
Yeah, when I tell people they're early, and then they ask me what the price is, and I say it's 120,000 or 100, and wherever we are today, 110,000. They laugh at me. They're like, "Yeah, of course you're not early. You know, I've missed it." Like, and then you always get the what's the next cryptocurrency conversation, which drives me insane. But yeah, I mean, I think if you look at Saylor's prediction of, you know, what is it, 2042, that we'll be at 21 million, or Jeff Booth's sort of gradual approach to 43 million per Bitcoin, then you can see we are very, very early, and this is going to look like a little speck on that eventual chart as we just go higher and higher. So yeah, I think the work you're doing, constantly educating people. I mean, my work is slightly different. You know, obviously, I'm just talking to high net worth individuals, family offices, and the like, and sort of gently explaining what Bitcoin is and how it works and functions, and why that attributes value to it, and sort of help them see where this is likely to go on that basis, and what the steps towards that look like. But other than that, it's just education. Like, it's sort of like, you can lead a horse to water, but you can't make it drink, is sort of the ultimate point when it comes to orange pilling. Like, if someone's like, oh, too hard, or I don't have time for this, or I've heard it's a Ponzi, then honestly, what I've learned is just don't even waste your time. It's most people alive today have only lived in the fiat money experiment. right? They've grown up trusting that paper is money.
Yeah.
And I think that we will definitely look back on this time as just this very bizarre moment in history where humans used absolutely useless paper as money. And never before had that happened, and never again thereafter will that happen. But I think that because we're living in it right now, it's like that frog boiling in the water kind of scenario. And even you are asking me the question, oh, it's getting a bit boring out there, and like, just do something, Bitcoin. And it's like, well, like this is the measurement, right? Forget about what it's doing in dollars. It doesn't actually make any difference whatsoever. The dollar will do its own thing based on what a bunch of old guys sitting in a room in the Federal Reserve decide to do with interest rates, right? Or their various different printing approaches. So yeah, if you continue to focus on the fiat system, then it sort of doesn't make sense. And I think that comes back to the point of, I've missed it. No, you haven't missed it. You're at the beginning of the adoption of the next money, of the next pristine assets that will collateralize everything in the future. So understand why it is the pristine asset, understand why it is the next money, and then you can relax and stop with the diversification trade and just focus on going all in.
When you look at that and then look at, 110, 20,000 something United States dollar units needed to buy one Bitcoin, that is actually the signal of how far we can go, I would say. That
exactly.
It's already there. Whoa. Yeah. Right? Like if we still have so much to run in terms of adoption. So having talked through all of this, what is your current outlook on, let's say, the next year, 18 months? Is there anything that significantly changed for you, for good or for bad? And what are you expecting or looking forward to?
Yeah, look, I think everybody in the space feels more happy and optimistic even after what I just said, when the price is making new all-time highs. So I look forward to that. I think we'll probably be seeing it in the next month and, even a few weeks. I think Q1 and Q2 of next year will continue. I think the 4-year cycle as we know it is likely to extend. Liquidity is just too much, and that's not reversing anytime soon. So I think we'll see things accelerate into the first quarter of next year. But I think we could still finish with a very strong, even October and fourth quarter.
Awesome. Well, thanks for this update. Thanks for celebrating episode 200 with me. And really enjoyed it, man. And I'm excited to see you soon in real life.
Mate, congrats again. Really great work you're doing. And I'll see you in Amsterdam.
I hope you enjoyed this episode. If you did, you can click here to find more just like it, and click here to find all Bitcoin for Millennials podcast episodes. Also, please like this video if you want to help shine a light on the message of Bitcoin, and subscribe to my channel to stay connected. I hope to see you for a next episode. Bye.